Welcome to the program. To say 2012 was a busy year in the Eurozone debt crisis almost seems like an understatement. This time in the business interview, we're talking about the year that was with economist and writer Daniel Cohen. He's a professor at the Paris School of Economics and the École Normale Supérieure. Thanks for joining us.
Thank you.
All right, before we start in earnest, though, let's just remind ourselves of the roller coaster of a ride that we have seen in 2012. The year had all but started when Standard & Poor's downgraded several Eurozone countries, including France, which lost its AAA credit rating. Then, in February, the European Central Bank stepped in, offering cheap loans to shore up the banking sector. March saw private creditors agree to writing down Greece's debts by 100 billion euros, a key condition for another Greek bailout deal. In April, borrowing costs for Italy and Spain rose to alarming levels where Greece, Portugal and Ireland had to go looking for bailouts. And then in May, an inconclusive election in Greece fueled speculation of a Grexit and a Greek exit from the Eurozone. Spain then admitted it would have to ask for a bailout for its beleaguered banking sector. Later in the year, Eurozone ministers paid out close to 40 billion euros. Many say the turning point came in July as ECB President Mario Draghi pledged to do whatever it takes to save the euro, and Italian and Spanish borrowing costs came down in September as Draghi outlined how the ECB could support weaker Eurozone nations. In October, the Eurozone's new bailout fund, the European Stability Mechanism, came into operation. Then in November, figures showed the Eurozone was officially in a recession. All right, if we turn then to you, Daniel Cohen, has the Eurozone turned the corner? Will 2013 be better than 2012?
I think the directions are both ways. That is, on the one hand, as you very clearly explained right now, the systemic risk which existed at the beginning of 2012, I think, are moving away. The risk of a euro breakup, of even a Greek exit, all these things are in a large part of the past now. In particular, the Draghi intervention clearly shows that, yes, the euro is certainly here to stay. So I see the systemic risk moving away. The discussion on the banking union will take place and certainly will be concluded on a lower scale than what was expected before, but still will deliver the product that is expected by the market. On the other hand, 2013 will be the year when the resilience of the economies will be tested in the background of a massive deficit reduction. In particular in France, we are embarked into a huge program to bring down the deficit below 3%, starting in the middle of last year at 5%. So this is a 2% take on the economy, which could have spiraling effect on growth in France, and that will be a moment of test.
So when politicians like the French President François Hollande and Mario Monti in Italy signal or say at least that the worst is over, they could be wrong there.
The systemic risk is over, I think, but the economic reality is still there. And of course, you cannot just separate the two. If 2013 is really bad in terms of economics, in terms of growth, in terms of unemployment, then everything is possible. In Italy, we'll have elections, so a lot of crazy things can happen. And even in France, when the next elections are for 2017, if the popularity of the government falls so low that nobody trusts in any of the reforms that are proposed, that could be bad also, and then it can spiral back into the systemic risk. But at this stage, I would only bet on an economic recession more than on a systemic breakdown.
If we look at the risks in 2013, then you've mentioned Italy. Is that the biggest risk for you this year?
In terms of politics, yes, certainly. You will have new elections, and who knows what will come out of it. No, I think really it's relatively well spread out. France, Italy, Spain, are all in the same boat. And the question, really depends on the resilience of the Eurozone economy at large, and this will depend on many parameters. In particular, the question is this a one-off, take on the economy? We have to reduce the deficit, and then things will go better better, and therefore expectation can be lifted up at the middle of the road when we see that the end of the tunnel is not far? Or is this just the opposite? If, say, in June, people realize that the economic growth in France is well below the expectations set by the government of 0.8%, and implying that the target deficit will not be reached, because if growth is lower, by definition, the fiscal deficit will be increased almost proportionately to the reduction of growth. Will that trigger a wave of bad expectation? The fact that, for instance, you need another round of fiscal measures of consolidation in order to reach your target. Will there be a sort of multiplier effect of the slowdown on growth, on expectation, on new measures to be taken? I hope that, let's say, by June of 2013, the Commission, the community, in the financial community, will realize that we've taken a set of measures. It is normal that this had a bad impact of growth. We should not go for another round of measures in order to sort of compensate the fall of the fiscal packet.
But you say that you're hoping that Eurozone politicians will come out with something. All throughout this crisis, though, there's been criticism that the politicians, they are kicking the can down the road, and that they really haven't taken action until the markets have pressured them into taking action. Do you think that will continue?
Well, a lot of decisions have been taken, but it's true, always too late. At the end, they were taken. The Draghi proposal, the banking union, the ESM, which comes on top of the EFSF, that makes a lot of measures, but it's true, very slow after the fact. Again, we'll have a test in 2013. There will be a moment when, I can only hope that the European Commission, the Eurogroup will say, fine, growth is lower. We know for which reason it is lower. It's because of the measures that we are taking. Let's leave it there. Let's not add another set of measures in order to meet a target which will move away. Look at Britain. The impact on growth of the measures taken is such that you have almost self-defeating austerity measures. I think we have to break this self-defeating circle by giving a chance to growth.
Now, you say that perhaps we don't really see existential threats to the Eurozone anymore. We're no longer talking about the possibility of the Eurozone breaking apart. The Greek finance minister, Yanis Strounaras, he has warned, though, that there is still the possibility of Greece leaving the Eurozone at the end of the day. What do you say about that?
Well, I think a lot of measures have been eventually taken for Greece, except those which are the most important, namely give growth a chance. That is, we have made one set of austerity measures after the other. At the end of the day, these measures have totally disrupted growth in Greece. So at the end, more money was needed than was originally expected, exactly for this reason.
Alternative, though?
I think, yes, the alternative is, give 2 years of growth to Greece. Just reset the expectations upward. That is, a set of measures has been taken. Let's freeze for a moment those measures and let's see what's going on out of it. Rather than saying, hey, you are behind schedule, let's add another train of measures, which we know will brave growth even more and therefore, reduce the probability of reaching these targets. My own bet, however, is that given the fact that another round of money has been poured on Greece just right now, after this debt write-off, a new package of buyback has been engineered. I think that politically, this is a signal that more will be forthcoming. You don't add another 30 billion in order just for a year later to say we made a mistake. I think too much money has already been given to Greece to stop in the middle of the road. So my bet is past the German election, which will be, in fact, the critical moment of 2013.
That will be a key moment, won't it?
The number one issue of the year 2013, September 2013, the day when the Germans will vote. After that, I think that a lot of new things will become feasible, and in particular, a further debt write-off of Greece debt, I'm sure will be in the cards afterwards.
Let's talk about the real economy and how this is impacting people in the streets. Unemployment in the Eurozone, it has hit a record high above 11.5%. It was 11.7% in November, according to Eurostat. Do you think that will continue? Are we going to see unemployment rising much further?
Course.
Or is there a chance, at least, that we could start seeing those unemployment figures coming down?
Zero chance. It can only rise. The Eurozone will be in a recession next year again. Again, I think that France will be at perhaps zero. The expectation was 0.8, and we are taking off the budget something which is the equivalent of 1.5% of GDP just for the year 2013. So the IMF, there was a famous controversy now, which was launched by Olivier Blanchard, showed that we systematically underestimate the multiplier effect of these measures on growth. The multiplier means, by how much growth is reduced when I reduce the deficit by how much. So if the deficit is reduced by 1%, according to the IMF, you may reduce growth by 1%, maybe 1.5%. So here I'm talking about measures which reduce the deficit by 1.5%. At a minimum, this will reduce growth in France by 1.5%. So we are starting with an expectation of 0.8. Where do we end? In negative territory, if you follow that. So certainly growth will be zero, maybe negative, and therefore unemployment will have to rise. And this is, I think, across the board. So the question is, the only driving forces of the European economy are the countries which are not in these trembling times, namely the countries of the north, namely Germany. What will happen in Germany? If Germany managed to show some resilience, if maybe wages are increased a little bit as expected, as a sign with the unions, then maybe you can see something going on. But, this will be very difficult.
It sounds like we have a minefield also in 2013 when it comes to the Eurozone debt crisis. Daniel Cohen, writer and economist, thanks very much indeed for speaking to us. And with that, we're going to wrap up this edition of the Business Interview. Thanks for watching us in 2012. Do stay with us in 2013.